aspects with that whole process, because I think what you've got to do is you've got to do all three. I think what you've got to do is all three of those aspects of it. There's got to be some natural ability, regardless of how good you do, how good you see trades. If you still don't have the confidence and you still don't have the personal characteristics that's going to make a trader, you're still going to struggle. Doesn't matter if you've re-engineered any trade, you're still going to struggle. So I think you need to have a natural ability to some degree in terms of trading to be successful going forward. Just because you pay for a course doesn't give you the right to be successful at something, the same way as just because you pay for a university degree doesn't give you the right to get a first-class honours or a master's. You've still got to do an awful lot of work to achieve it. I think a lot of retail traders forget that they don't have a right to success. They still have to put in the necessary groundwork. The second part to that is practice. Well, once you know you've got an edge, every great footballer I've ever known practices and practices and practices and practices, even though they've got a natural God-given talent in their sport. There's a lot of people out there that have got natural God-given talent. So if you still want to be the best, you've still got to practice. So it's not about choosing which route to success is the most important. It's about all three routes, but you've got to start building it from somewhere. Success in supposing the first aspect of having a natural talent comes from building your confidence levels up, and your confidence levels comes up from practice, and your practice comes from the re-engineering of great trade opportunities. So instead of taking one aspect, which is the re-engineering, we're going to cover all three aspects of getting great at trading, and I think that's the important difference between what we're going to show in this room and what we have been showing in this room, is trying to make sure that you do enough of each of those elements ultimately to become more naturally inclined to be a trader. So that's what we're going to be focusing on as we go forward with these trades. So look, guys, we're still a while short of the cash open. We're about 40 minutes ahead of the cash open just now. It's important that we start looking for dealer positions as we move into the last run into the cash open. And dealer positions, if you recall, guys, is all about is basically all about reading the markets, and it's not that difficult. It really isn't that difficult to do. It just takes some practice. It just takes a bit of work, and when you start thinking about the work, you start thinking about leans. It was a question that was asked earlier about leans. You know, what leans do we take? There's a lot of Altics, there's a lot of block buyers, there's a lot of block sellers. So when we look at those aspects of trading, we can start to recognize very, very simply that if we want to take a lean against anything, we have to start with something about, we can't just take every lean. We've got to start thinking about what leans are going to be important to us. And we can see in here, for example, on the S&P that there is definitely some sort of commercial buying in here. So I'd love to find a lean in here. Now, I don't have anything in there. The only thing you've got to remember, though, is there's always a lean if I want to find one. It's up to me to try and have a way of being able to look at that, either through the footprint charts or a volume increase or simply a delta increase that gets jammed, regardless of whether it gives us a Baltic or whether it gives us a block trade. So having found a lean in this area here, we get a buy trade and it makes a lot of money. When we come up into the retested top edges up here, we can already recognize that this doesn't seem to be quite right. This doesn't seem to be quite right, does it? This seems to be all wrong, in fact. We should be back into that same swing high, and we're not. So there's a couple of beautiful leans in there. I think this one would have been hard to call. Looks about fair value, perhaps. If we got a lean on this one here or a lean on this one, that would have been a lot easier. But because we've got a lean in the background, we can still use that lean. And you could have made yourself a few ticks and a stop at break even at least. On the retested highs here, you can see quite clearly that the delta's gone above the prior deltas. You can see the price is still well short of the prior high. And that gives us a very, very nice area to lean against for a short trade on the S&P. A lean gives us some nice opportunities. The takeaway from that sell trade was delicious, as you can see. It wasn't just delicious, it was fantastically delicious. There was a lot of opportunities to add into that position here. And from that position there, you can see that you would have been looking for leans in this area. We got a very nice sell-off during that period. Very, very easy. When we come down into the bottom edge, we're starting to do exactly the same. We're starting to look for something. Now, that look can come from a value narrative that's evolving in the background, or it can come simply from the delta. Now, the only challenge you've got with solely using delta is what? Well, you might not have any sellers coming in. It doesn't make it not a buy. It just makes it a different type of buy, doesn't it? So the idea is that it's always better for us to see these guys than not see them, because if we haven't seen them yet, they may well start pressing and pushing over levels to try and get the necessary volumes, and that's what we're hunting for when we're doing these things. When we see the buy trade opportunity against this big lean here, you can see that this lean resulted in a very aggressive buy side break. You start to say to yourself, you know what? Okay, there's something for me to lean against. I'm going to take a buy at this trade, and when the price retests, the deltas are heavy selling. The price is nowhere near that. In fact, on a red delta, we get a green candle. So on that basis, you'd be saying, you know what? I'm going to buy for that squeeze. That looks like an absolute no-brainer trade right there. And it was a no-brainer trade, made some easy money. But if you look at all of these leans, what's common with all these leans? They all make money. Well, if they all make money, what's your problem? Hold on a sec. You've got to start somewhere. You've got to practice the skills of the local. This is the locals trading and locals 101, isn't it, really? Is this process of leaning against, well, it's not 101, it's 105 or thereabouts, because 101 is basically understanding the interns exercise. But when we understand the interns exercise and then we see something like this setting up, this is the perfect example of a bottom edge already being put in, and then seeing the lean and then going after the weak liquidity that's now on the short side here at this higher print. And we get the squeeze here, which was worth a lot of money. I keep saying to the guys in the room this morning that you don't have to find many of these trades. You don't have to find 20 of them. You don't have to find 30 of them. You have to find one of these trades. Just one. And you have to find that one trade every day. There's usually going to be a choice of 50 or so, so shouldn't be too difficult to find one trade out of those 50. And you should obviously be able to try and take advantage of those opportunities. Missing those opportunities means that you're obviously in trouble. There's got to be a reason why you're missing the key opportunities. As you go into that phase, you can see that buy trade resulted in this fantastic buy side breaker after the market traded into this paycheck liquidity. And now remember, if I'm buying into this, knowing that I've got paycheck liquidity above this level here is obviously critical to this breaking trade here. There's no commercial sellers, remember. And we've always said if you can put in 3 levels of paycheck, if you can put in 3 levels of paycheck, and they're all very close to each other, you're already starting to recognize the possibility of massive asymmetrical outcomes. A little rotational here, and a commercial buy or a locals buy, a dealer's buy, puts you into prime position to take advantage if this market's going to break, you're in it already. And sure enough, getting into it down at this price here, the price breaks hard to the upside, and it simply is just the day made. I mean, it's not the biggest trade. It goes 77s to 85s. It's only 8 points. It's $400. It looks like a lot more. But it's $400, guys, and it's only taken 30 minutes. And you're obviously sitting beautifully now for the rest of your day. If you want to pack up at that stage, you pack up at that stage. Your day is finished. And the outcome from that is that you get some even more buying opportunities here. Look at the deltas. Look at the price action. So you get a delta lean against perhaps even another Voltic here. You're back in it again for another swing and another profit, another outcome. And that's another big profitable trade. Look at that trade. So you made $400 on that trade. You're back in again here at around about a price of 83s. It's just traded 93s, 94s, 95s. $600 profit. $400 on that one, $600 on that one, $1,000 per contract, possibly $1,100, $1,200, $1,500 on 2 contracts. So you can see that the outcome from those 2 trades, that really is your day finish potentially. You don't have to do any more unless you want to do some more. Unless you want to practice your 10,000 hours. The more that you do, the better you get, of course. So when you start recognizing this pattern, and you can see another pattern here of dealer buying behavior, and you're saying, okay, they're still going long, okay, let's see what happens. So they go long again, and sure enough, another profitable trade, as if by some sort of voodoo magic. Not really. It's just the same process repeated over and over and over and over again. Repeated over and over again is point number 2 of Ron Friedman's steps to greatness. Point number 2. Repeating, practicing, repeating, practicing, repeating and practicing. And you can start to recognize that yet again this trade was an absolute sensational outcome. So when you think about it, it's not that difficult. It really isn't that difficult to start putting some sort of quality to these narratives, looking for, identifying, and trading around outcomes, one single piece at a time. In fact, Nick admitted this morning that perhaps one of his problems has been he's trying to learn everything about every market. He said so himself. Trying to learn everything about every market to try and understand how the whole world works is a bit of a task. It's a bit of a task, you know what I mean? These are the things you can do over the next 10, 15, 20 years, but in the meantime, you've got to fund that journey. You've got to fund that adventure with trades. You fund that adventure with trades by learning one market and become a specialist in that market first. And that funds the activities whilst you get to know the other markets slowly but surely in your own time, if that's how you would like to develop your career as a trader. You're now a trader in maybe 2, 3, 4, 5 markets, so be it. But you can't get to that at step 1. You've got to find your market and you've got to work it. You've got to learn about it. You've got to read about it. You've got to get into the news articles about it. In other words, if you want to trade the Thai baht for whatever reason, well, I would assume you're going to have access to the Thai news channels. Why would you trade the Thai baht unless you're going to have access to the Thai news channels? You've got to know what's happening, whether they're locking down, don't you? You've got to know that information if you're going to be a professional trader. So these are the important questions that you've got to ask if you're trading oil. Are you looking at oilprice.com, which is a great website for oil information? Are you looking at Reuters oil pages? Are you looking at Bloomberg's oil pages? Are you looking for any oil inputs that can improve on your oil trading? You become a specialist in oil. Likewise in gold. What's happening with the mines? Are they closing mines because of coronavirus if you're a gold trader? Does anybody know? Does anybody know if the mines are closing because of that? In which case there's going to be potentially a supply problem coming into the mines, or a supply problem of silver or copper, or supply problems for oil. What's happening? Does anybody know? Or is everybody just paying lip service to this idea of being a good trader and simply skipping around the edges, trying to make do with as little information as possible? Well, guess what, guys? I can almost guarantee you're not going to be very successful if you flit around the edges of these things and not really dig deeper into an understanding that the professionals have of these markets. You need to know stuff. Information is power. But you can't know stuff on everything. You can't know stuff on everything. If you could, you would know how every single atom would move against every single atom in every single collision. You'd be able to predict the second a goal would be scored in the future, because you would know everything about everything. So when you think about that idea of all knowledge, all power knowledge, it's impossible to achieve. So what you've got to try and do is your best. And obviously that's based around trying to learn individual pieces of the jigsaw puzzle and perfect them through the process. But obviously it starts with the re-engineering. The re-engineering tells you what you're looking for and why you would want to know about it. The practice then solidifies the re-engineered process. And then once you've solidified the re-engineered process through repetition, the next step is pretty obvious. You actually gain a lot of confidence, and it finds that dealer in you, it finds that trader in you, that natural born trader, because you're confident that what you're seeing and what you're doing is the right things. The confidence then bubbles over into trading, and obviously your trading becomes successful. But it starts with the re-engineering process. So as I said, unlike Ron, and I haven't read Ron's book, so I'm maybe doing a disservice to part of that storyline. But I don't think it's just about getting the three. I think it's about getting all three. I think it's about getting all three elements in line. You will become the best that your natural ability allows you to be. And that's obviously through the other two parts of the process. So we're focusing on that today, guys. We'll be focusing on the S&P, of course. You can see a very, very big opportunity to buy lots of S&P in here this morning. Great opportunity to buy a lot of stuff. Big lean, big trade, nice outcome, another profit, green light for you to get into that long trade and a very, very nice buy-side profit away from that trade level. It's not about one single trade. You might try it and it doesn't work. You might try it again and it doesn't work. You might try it again and it doesn't work. You might make 5 ticks and scratch. You might make 5 ticks and scratch and suddenly it would come to a realization, this doesn't work. No, it does, not that. Still making 5 ticks and scratches. What doesn't work is that perhaps the value changed. What doesn't work is perhaps the overall narrative changed overall. The fact that there's sellers at the top edge, something you should be watching for. I took 2 gold trades, 2 or 3 oil trades, and 2 or 3 oil trades, and it never played out. It never played out. I still made money on all 3 of them. It still made money on all 3 oil trades. I'll show you the example here. I took a buy trade on oil after the top edge sell. I took a buy trade in here. We got a few ticks, 5 ticks, and scratched out. We took another buy trade, made some profits, and scratched out. I took a final buy trade on the failed auctions at the bottom edge, and we got top line profits for a very nice trade outcome. And then the market sold off. And this is what we start looking at. This is the idea that we start looking for, isn't it? Because trading up into these areas, this ended up being a paycheck buy, didn't it, right there? And this actually ended up being a paycheck sell right there, where we took our profits on that trade. So you can start to recognize that the logic of some of the things that we teach ties in with each other. And eventually things that seem to be randomly generated in terms of edges all now seem to tie in with each other. These opportunities to buy into or sell into these trade levels. We did an example of that very thing on the oil markets and those downticks. This is it here. We talked about these 2 prior buys here and here. We had Voltics, we had volume, we had deltas, and then we got an exit here at 102. That was the same exit, and then we carried on to the right-hand side. We got another big Voltic and another level and another big lean again, another big delta, which gave us a perfect lean. And then when you look at that, you say, okay, well, that lean there had a little bit of paycheck about it, didn't it? Because we had a prior level here, we had a prior level turn here. We've got 2 elements of the paycheck. So there's going to be a little bit of liquidity here, which is that volume candle. So we start to recognize the volume for what it is, paycheck liquidity. But then we put it into context. Why did it happen? Why was anybody interested in it? Well, this is the reason why people were interested in it. Inflation break-evens were going up. The copper gold line was going up, so commodity risk was going higher. And we were down into this bottom edge of oil, making it discounted. So of course people are going to be interested in oil. It seems cheap against everything else that's going on in the background. Tying the order flow, the leans, the deltas, the levels together, and it starts to make sense. And all of a sudden, boom, we've just made a few $100s per contract. And that's what we've just seen taking away from that price level. So it's very, very important that we start gaining confidence in the edges that we're using. And then by gaining confidence in the edges, we start Well, trading them. It's as simple as that. We start using them. You start trading them. So we've got cash open in just 25 minutes, guys.